Howdy, folks. Good afternoon. It is now. This is Jeff Camarda, of course. And I just wanted to give you a preview of the gist of the reports that your personal wealth advisors will be reaching out to you beginning this week. It's Friday, January 20th, as I record this, and then getting into your personal information. But let me begin with our economic and market summary. And to begin, as most of you probably know, a recession is very likely for 2023. In fact, I think we've been in one for months, as we have been mentioning through 2022. And layoffs are continuing to build. Microsoft and Google just announced big ones this week, and I think it's going to snowball. There has been some really good news on inflation, but there's still lots of risk out there, and a lot of the things are not good news. So it's too soon to call it under control. We think it's going to be a choppy year. Hopefully the Fed gets it under control. We'll just have to see. Interest rates, because of this and other factors, will probably continue going up, but not as fast, with a Fed target a bit over 5% for the Fed funds rate. The stock market has been looking short-term bullish and still does, but longer-term bearish, and we expect drops at least through the middle of this year. So we're treading very carefully and suggest those that are not having Camarda manage their money do the same. The real estate market continues to darken from rate hikes and a cooling economy. And I can tell you personally, as a real estate investor with a bunch of rental property on the market, that by the buying temperature has cooled significantly. It's getting harder to get deals done and get good prices. And I think that's going to keep getting worse. Bright spots for a worsening global economy include China. China's reopening. Of course, there's like $600,000 Chinese dead from COVID and a falling dollar, but there are a lot of dark spots too. So overall, the global economic picture remains gloomy. Earnings estimates, this is for company stocks, of course, are declining based on the worsening recessionary environment. Again, that's not good for the stock market. Inflation is still rising faster, apparently, than worker compensation, which means even with wage hikes, the families are further behind in terms of what they're able to purchase and consume, meaning declining real wages is the gist of that. And the Fed wants to chill the labor market significantly more, so we should be expecting a lot more layoffs. There's also been a new tax law change. Required minimum distributions from IRAs now begin at 73, not 72. It's not that simple. There's more complexity based on a Secure Act 2, which was passed by Congress late last year in December. More detail in your personal situation from your personal wealth advisor. In terms of Camarda's portfolio performance, we're very, very proud of our moves to protect your portfolios from last year's falling markets and pleased with the performance on a risk-adjusted basis, and we'll continue to be cautious until conditions improve. We just had a portfolio board meeting this morning and went through the numbers for recent periods for the quarter, of the month, and for last year. And we're quite impressed. I'm very happy with how well we've been able to do and buck the declining market trend for the most part. We eventually expect a huge market upside once our indicators flash green, probably as the recession starts to wind down. Usually the market, reverses before the end of the recession once it appears that happy days are coming back, and hopefully that will occur later this year. So we're still keeping a lot of powder dry, but expect to make an awful lot of money when the market gets hot again, as it always has in the past. Right? This is a cyclical thing. It's a bad one, and we don't think it's going to be over, really soon, but sooner or later it will. Tactically, we're watching select sectors like gold for ACP, active capital preservation, one of our portfolios, and parts of an improving bond market. We're watching certain sectors that look attractive, and we're watching our indicators very closely to guide those decisions. Now, again, we had an investment board meeting. Some of you had asked about bond ladders and CDs and so forth, and we've been studying this for the past 6 weeks. But because CDs and longer-term bonds really lock you into a term, and with very attractive money market cash rates, we think the most profitable long-term strategy is taking those rates on short-term bonds or money markets, but staying fast and liquid and ready to pounce once the markets turn. And I just talked to a fellow actually here in Jacksonville that I think is going to sign on with us next week. And he's been in cash, wisely, I guess, at another brokerage. And I said, well, I'll call him Willie. Willie, what are you getting on your money? And they say zero. I said, gee whiz, we're getting better than 4%. So even after paying us a fee, you're still significantly ahead. And that's something to think about, particularly for non-Camarda clients, is it's not just definitely maneuvering and selecting equity positions. It's also treasury management. What do you do if we're sitting on cash? How do we maximize those yields? And yields have gotten pretty attractive, if you know where to look. A lot of folks don't. So I think that's pretty much it. One other, I guess, a couple of things that I want to, point out that your PWA will go through with you. That for most of you, it's time for us to update your financial information so we can fine tune your wealth planning and talk about things that get you the advice that's most valuable and important to you. So your PWA, please make an extra 10 or 15 minutes for them as they go through the quarterly calls with you to let them update their information. We call it annual review profile, so we can really sink our teeth into refining your wealth plans. The next thing is it's tax time again. And if you run a business or have real estate that you rent out, odds are good to really high that you are way overpaying your taxes. Our the wholly owned affiliate Taxmaster, and they're two companies owned by kind of a common holding company that is owned by Camarda Trusts, but they're segregated because the IRS regulates one type of business and the SEC another. But they're very close and share information. But the Taxmaster is expert at saving taxes for real estate investors and business owners. And if you'd like us to refer you to Taxmaster for a free review, a tax improvement review for business owners and real estate investors, we'd be happy to do that. This is a special free offer for Camarda clients. We charge the public for this use, typically $1,000, by the way. The next thing is, and I want to remind you of another free service that we offer Camarda clients, which we call investment stress tests on outside assets like your 401k, it might be a Fidelity, or brokerage accounts that we don't manage. And while the market is still bad and we think going lots lower, there's a lot of opportunity to improve portfolios like that. And the stress test could be very valuable to get briefed on risks and fees, get quality ratings, maybe avoid some big losses. Again, these are completely free and without obligation. We've helped hundreds, if not thousands of people. We'd be happy to do one for you if you wish. Just ask your PWA. And again, use this any way you want, with your accounts at Vanguard or your broker at XYZ Brokerage. I mean, you don't have to move the money to us, but we think you'd be better off maybe if you did. But use the information any way that you see fit to improve your family's trajectory. And I guess that's pretty much it. As always, it's a pleasure for us to provide this, we think, sophisticated the total wealth care service to you. Your PWAs will be calling soon. I always remain available to you via email if there's something that you need from me or something that you're not happy with and you want me to tweak or get the stick out on. So that aside, and you probably won't be watching this till after the games are over, but go Jags! Let's go ahead and really trounce Kansas City tomorrow. Of course, by the time you see that, that will be old news. I hope it's happy news. And with that, I wish you all the best weekends or weeks ahead. This is Jeff Camarda signing off for the Nonce. Ciao.